Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right, today we're going to be talking about reasonable compensation for S Corps. Okay, this is actually a very important thing that you really need to understand when you're going and forming an S Corp. So what happens is generally somebody hears that, hey, you can save taxes by being an S Corp versus, whatever, being a sole proprietor or a single member LLC. So we go and we form an S Corp, but we don't know all the rules. All right. So the difference between going from a sole proprietor to a from a sole proprietor or a single member LLC to an S Corp is this thing called reasonable compensation, where you as a shareholder employee, as the owner, you will be an employee of the business. Then you have to pay yourself a reasonable compensation, and you have to do that on a W-2. Now, the way that S Corps work is that you pay the salaries for your employees and your shareholder employees, and the profits then are then distributed to to the owners or the members of this S corporation. And so the distributions are not subject to self-employment tax. And so that's where you hear about the tax savings. However, you are not getting away from paying your Social Security and Medicare, which is what the self-employment tax is. So instead of you paying self-employment tax on the whole amount, you're paying it on the profits. It's still, Social Security and Medicare. You're just paying it differently because you have to pay yourself on a W-2. So you have to withhold that from your paychecks versus paying that self-employment tax, throughout the year with estimated tax payments or at at filing time in April. Okay. So you're not getting away with not paying any Social Security and Medicare. It's just as a single member LLC or a sole proprietor, it's called self-employment tax. And on on your W-2 is Social Security and Medicare. Okay. But you still got to pay it. All right. So the issue with then with the reasonable compensation, the way that it's abused is that you have a person that has an S Corp and they're bossing out and they pay themselves $10,000 when they're making $1 million in their S Corp. Okay. So then you said you paid yourself $10,000 and you withheld your taxes on that. And then you're taking this distribution without paying the appropriate amount of taxes. And that is a no. All right. So what I want to talk about is some of the things that the IRS looks at to determine reasonable compensation before you go off all willy-nilly and trying to pay yourself, $5,000 when you're making $500,000. That just doesn't work. Okay. So the easy way to look at this is if you had to go out and suddenly find a job, if you were to find a job doing exactly what you're doing, how much would you expect to earn? Or if you decide, I want to step out of this and I need to hire someone to take my place and do what I do, how much would that cost me? What would that investment be? That is reasonable compensation. But let me give you the determining factors. We're looking at your training and experience, your duties and responsibilities, the time that you spend in the business, what your other payments to your non-shareholder employees are, your timing and how you're paying bonuses to people, what is comparable pay for similar services, any type of compensation agreements that you might have, and, just all of this is all working together. So let me give you an example. So if you are a CPA of, 20 years experience and you went to go find a job, would you expect to make $10,000? No, you'd probably expect to make $100,000. So if you are a CPA of 20 years and you're paying yourself $10,000 in your business when your business is really making more money to pay you more than that, that is not reasonable compensation. Okay. So this is not something where you get to decide, okay, well, I'll just pay myself this meager amount of money and then I'll take the rest as a distribution so I can save on the employment taxes. That is a no-go at this station. Okay. You really have to be careful with this because in the event that you get caught, the IRS will reclassify your information and make you go back and pay back taxes. And I want to say they can go back 3 years to do that. Don't quote me on the 3 years, but they can go back and make sure and basically make you pay those back taxes. So the thing that you want to make sure that you do is do your homework, okay? And look at based on what your profits are for your business, okay? So if you're getting started as an S Corp, let's say that you only made, $5,000 profit that year. Well, even still, you still have to pay yourself, okay? You can't decide, well, I'm just not going to take a salary at all, regardless of how much your S Corp makes. Doesn't work. You have to pay yourself. And your business can actually operate at a loss, but you still owe employment taxes because you're still supposed to be paying yourself. Okay? So before you go and, if you have a single member LLC, if you can elect to be treated as an S corporation, or you can just start out as an S corporation. Listen, get competent tax advice, to see if this is the right move for you. Please do not just go off all willy-nilly based on what you heard, okay, where you can save taxes, because taxes is only part of the picture. You also have to, and that's only at the federal level, okay, because every state has different requirements with what they require for business privilege taxes, whether it's, a minimum tax you pay for your S Corp. Every state has different responsibilities. So just saving on self-employment may actually not even be worth it for you. You have to know what all of your requirements are, federal and state, because we got 50 different states, 50 different sets of rules. Whether it's the cost to have to form an S corporation, again, what your minimum tax is. There are some states that have minimum tax that is not based on anything. It doesn't matter if you don't make any money. You still owe a minimum tax in order to have an S corp in that state. So there are a lot more moving parts than just saving your 15.3% self-employment tax. That might wind up being a small price to pay instead of the price for compliance, because that can be expensive. You definitely need to have someone that can manage your bookkeeping and payroll for you, because as a business owner, you can't do it all. If you have an S Corp and you're doing your payroll and bookkeeping and all that, you are either not making enough money, or you should not be an S Corp, because you should not be doing this. You should be making enough money to outsource this to someone else to where you can focus on earning money for your business. Okay. That's just it, because the compliance for all of this is really key to you staying out of hot water with the government, state and federal. Okay. So I hope that puts reasonable compensation in a nutshell. If you need to book a consult, you can book one at www.homebiztaxchat.com for a 15-minute complimentary consult. Okay. So that's it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. Thanks a lot, you guys. I'll see you next time. Bye.